Hey guys, Mike here. So is Alibaba stock back from the dead? We'll see about that. I'm going to show you the chart, show you what happened today, and go over what in the world happened, to this stock last week. When I talked about it, it was right at 130, and I said if it breaks below 130, there really isn't any support levels going all the way back to 2014. And of course, I'm going to go into basically what was the perfect storm that took it down all the way to like 108, I believe it is. And some of you had hit in the messages that you had bought in at 108, 109. And so, we're going to see this as a head fake, this move up. We'll go into that as well. Also, what Ark Invest did, which kind of surprised everybody with a purchase they made. And then go into some other news about the company and kind of where it's headed right now, okay? So if you're getting out of it, hit the like, subscribe button. I really appreciate that, guys. Now let's go ahead and get into the chart first. And so starting off with Alibaba's stock chart, as you can see today, big move up, measures around 10% right here, as you can see. And so if it continues to go up, obviously that 130 level, which I had circled on the last video, will actually become not support but resistance. We'll have to see if it can actually break through there, and I'm going to show you exactly what I'm talking about when we pan out a little bit here. Looking at the short term, you might get a short-term pullback because the hourly on the stochastic RSI is overbought at this time, but you go over the daily and it's obviously oversold. And so if we just kind of look here, this is what happened last time. What I mean by head fake. This popped up around 30% right here, and people thought, man, they were geniuses for buying the dip around 138, I think it was, and it went up to 179, and then from there it just absolutely crashed and burned. And so that's what I'm talking about really with the head fakes. Is another head fake or not? We'll find out. But really the big drop once it broke through that 130 level, was basically a perfect storm of news hit. When it comes out, the report says that Beijing's planning on banning foreign listings entirely. The action is implemented would result in Baba and 247 other companies worth a collective 2.1 trillion being delisted. That hits out there, and then of course what comes out right after that, Diddy shares plunge because they come out and say they're actually going to delist now. And then another report comes out, which most people hardly even see, but it was insiders are selling at a record pace. CEOs and executives are just selling stock like crazy. You can see in 2021, it's up to 69 billion. This chart goes all the way back to 2013. I don't think I've ever seen anything like it. So they see the writing on the wall as well, and that's got a lot of people worried. And of course, Hong Kong Treasury Secretary comes out and they try to say, hey, hold up a second. This ain't right. We're not planning on doing this stuff, trying to go ahead and give people reassurance. And they come out and say, basically, that the SEC is pretty much lying about what they're saying, that is untrue, that they're not being uncooperative and everything, and allowing these companies to be audited. And Wong went on to say that U.S. regulators could inspect audits of U.S. listed companies anytime as long as the documents concerned were not in mainland China. From the PCAOB's data on U.S. listed companies audited by Hong Kong firms, there are a number of companies where no part of the audit was performed in China. Hence, the working papers of these companies were not in mainland China, and the PCAOB could easily access these documents. For example, U.S. listed Hong Kong company Melco Entertainment was audited by a Hong Kong accounting firm in the city, and its papers could be accessed by the U.S. regulators. And so all that news and stuff just drug the stock down. And so, probably the biggest worry about this stock and most Chinese stocks like NIO, XPeng, all the rest of them is the delisting. I think that's number one. I'd be surprised if there's anything else. Hit me up in the bottom if you got a bigger number one. But that right there seems to be the number one that has pushed this stock down. And, the one thing I was going to just put in here for the heck of it, if you're worried about that and you're holding the stock, because some of you have told me in the comments you do, here's what happens if it does get delisted. And as we can see here, the ability to trade the stock on the U.S. exchanges and its New York Stock Exchange or NASDAQ ticker disappears. In this scenario, you may still be able to trade the stock OTC. Most brokerages allow OTC trading, though not all stocks are allowed for this to happen. And the other option is, if you can't do that, then you can convert, say, Baba shares or any of these type of companies to 9988 shares, which is Baba's ticker symbol on the Hong Kong Stock Exchange. Each 998 share is worth 1/8 of the Baba ADR. This means that you have your broker convert each BABA share you own to 89988 shares. Then you will have regular exchange traded shares. And of course, another option is just to go around it and just buy the shares off the Hong Kong Stock Exchange if that's something your brokerage actually do if you live in the US or in Europe. And so if you can do that, that's another way to take that risk off the table because BABA does have a dual listing already. And so, you know, the other thing that happened was I think took everybody by surprise and maybe even took pressure off of BABA and all the other Chinese stocks in a way as far as the delisting is what Ark Invest did. As you can see right here, looking on Lucid Tracking, you see on December 2nd, they actually purchased up to 277,000 shares or $13 million worth of XPing, which was kind of surprising to a lot of people because this company actually is structured as a VIE as well. As you can see on the legal side, during their IPO, the firm operates within a VIE structure or variable interest entity, as do many Chinese companies seeking to tap US markets. And if you go right here to the SEC filing, you can see it is incorporated in the state of the Cayman Islands, which is where these VIEs are incorporated at. And the reason why I caught everybody off guard is because earlier she had, a few months ago, she'd actually cut her BABA exposure and other Chinese stock exposure because of delisting and other reasons. And then to add this one when NEO is under huge pressure right now as well because people worry about it being delisted because, all these companies are VIEs. And so, that was surprising, took people off guard, but then, it may have let people say, well, wait a minute, if she's buying this, maybe she don't think it can be or going to be delisted or any of the rest of them is going to be delisted and we're going to work things out. Because remember, the pressure from delisting actually is not coming from the U.S. government. They have, if that's the case, you still got 2 or 3 years before they have to absolutely conform to these new rules. It's actually coming from China because everything I've read, it says that they don't want the auditors opening those books up, which is what that earlier statement said, where they're saying, no, that's not true, it's not true, and all that stuff. But, they've had that for years. And Diddy was a different example because they went against the Chinese government who asked them not to uplist on the US Stock Exchange, and you don't do that. And so they are paying the price for that now. And it got me thinking, JD.com, Baidu, have you noticed how Baba has been treated like the redheaded stepchild and been just hammered? So let me look at these other ones because I don't see them in the news as much, and let me see what their stock charts are doing, and they're just not treated the same. So if the delisting fear is what's really driving this and the slowdown and the growth of China and all that stuff, why is Baba the only one being treated like the redheaded stepchild here? As you can tell by the charts what I'm talking about here, if you look at Alibaba and then we bring up JD and Baidu, you can see JD, even though it's a VIE, is not treated anywhere near as harsh as Alibaba, and neither is Baidu. It's closer, but JD.com is just kind of treated as a regular stock for some odd reason. As you can see, you got Baidu only down 5%, JD is down 10%, and Baba is down 60% in the last year. Then we go to the 3 month, you can see JD is only down 1.5%, Baidu down 50%, and Baba's down 35%, even though all three are VIE structures. And if you have any information on that, let me know in the comments what I'm missing on that. But it seems like the other stocks just aren't being treated anywhere near as harshly as Baba is, when there should be, honestly, the same concerns. The only thing I can think differently is their CEO pissed off the Chinese government. And of course, I don't know if anybody's seen, the CEO since. I don't know. Everybody keeps looking for Jack Ma, but I don't know. I think there's been sightings of him in Europe or something. But I don't know if he's getting re-educated or what's going on over there. But the other thing to look at really is, China and U.S. trying to work out relations, but don't forget, the U.S. being number 3 on this all by themselves as the largest trading partner, right behind the EU and ASEAN. And because of that, both countries need each other, right? And so I don't think China, especially, with their GDP growth slowing, wants to sit here and lose their largest individual trading partner. And of course, the U.S. needs China basically. Well, they pretty much make everything for us at this point in time. We ship almost everything from China. So, it's definitely a partnership and a relationship you want to keep, going or in good terms. And then of course, the other big one here is, and I'll leave it like this, is why are people piling into Baba at this, particular, price, especially the lower it gets, and willing to take this risk. And it's pretty simple. And you can see right here with the growth numbers, guys. I mean, percent year-over-year growth, 33% in China e-commerce retail, international commerce retail, 33%, international commerce wholesale up 34% year-over-year. Others up 66%, total commerce up 31%. And those numbers look good, of course, but let's not forget here, the concerns and the risks. And this company is not what it was, okay? And again, the GDP, growth rate here, you can see has absolutely been tanking for years, and you see it still declining and forecast to decline even more. And to prove, I'll read all of the comments. You can see right here I was corrected. I want to thank this person right here. When they said it was GDP growth, I just referred to it as GDP, which is obviously not true. And this is what led Alibaba to obviously lower their forecast now, right? So ending in March, they expect revenue to rise between 20 and 23%, which is the slowest pace since 2014 when they actually debuted or IPO'd, and down from a May forecast of almost 30% growth. They're also expecting to undershoot the earnings per share in the second quarter. And so this is why I was saying in my last video that, going back to 300, very unlikely. It could happen way out in the future, of course. But, you're already cutting your guidance. The country's GDP growth is slowing. And the other thing is you got to look out for, which I got a video coming out on it this week, because a lot of you guys requested it, is, the real estate market over there is shaky at best at this point in time. And I'm gonna have a lot of details in that video to make you understand why, and kind of highlight a little bit of stuff. Do I think the bubble is gonna burst now? Absolutely not. But this is a big month, and the first quarter is a huge quarter of a lot of bond payments coming due. One of the real estate developers just defaulted the other day. And the rest of them, for example, I'll just give you a little hidden tidbit of what's going to be in that video. But, the Chinese government has done everything but take over Evergrande. They've already sent some of their people in there to try to help them out and restructure and things like that. They're loosening the restrictions on how much capital the banks have to hold and everything. They're loosening the lending restrictions. They're doing everything they can to try to keep them propped up. And unfortunately, this isn't the first time they've been in this trouble. I'm going to show you in that video. This has been going on for quite some time. I found a nice little video from about 6 years ago. And when you see it, you'll have deja vu, let me tell you. And so, that's something to look at. If that happens, of course, it's going to affect Chinese stocks, right? Chinese stocks more than American stocks, most likely. But again, it would affect it globally too. But trust me, bubbles can just keep blowing up and blowing up and blowing up, especially as long as that government is backing them. So anyway, hope you got something out of this. Let me know in the comments what you're up to. I know a couple of you got in at 108, 109. Congratulations if you're still holding right now. We'll see if it continues to go up. We'll see if 130 becomes resistance, if it continues to go up. Because don't forget also, in December, we usually have a Santa Claus rally, they call it, where stocks actually go up in December, right in the last few weeks there. And so, we've kind of got by tax harvesting, I think, at this point in time. I think people are maybe still doing a little bit of that, but a lot of people are doing it in the last couple of weeks. And so the funds like to end up on a high note. And so we'll see if that happens, or if the CPI data coming out this week, and then there's a Fed meeting after that, drags us down. And it's expected to be some pretty high numbers. So, we'll see on that, guys. Okay. So anyway, hit the like, subscribe button if you got anything out of it. And don't forget to hit that link down there in the bottom. Sign up for a BlockFi account to earn 9% on your Stablecoins, 9.5% on your Tether, and 4 to 5% on your other cryptocurrency, as well as earn the 1.5% back on Bitcoin for every purchase you make on that credit card, guys. I will see you later.